Welcome back after the break. And one of the stocks which is managing to trade in green is Pidilite on the back of Q1 numbers. And we have with us Sudhanshu Watts, MD Pidilite Industries, to talk about Q1 earnings. Sudhanshu, hi, good morning. We should start by asking about these additional tariffs on India, because that is something which is talked about. How will it impact your industry? How much Pidilite export to US? How much direct impact do you expect on your business after these announcements?
So Pidilite has a very, very low exposure directly to US. So in terms of the direct exposure of this tariff to Pidilite, it is very low. And I think as a company, from a direct exposure point of view, we don't need to worry. There are, of course, cascading impact on products, particularly in our industrial business, B2B business, when we sell to industries that have a larger exposure to this tariff. I think that's where we will have a little bit of impact, but we are confident of navigating this impact.
Mr. Watts, are you maintaining your double-digit volume growth guidance for FY26? Could you please shed some light on that?
We've always committed that we will deliver double-digit underlying volume growth and with a profit EBITDA corridor of 20 to 24%. So we stay with this, our EBITDA corridor of 20 to 24% and double-digit underlying volume growth. We are confident of being able to steadily deliver these numbers.
Mr. Watts, since you are telling us that you're maintaining EBITDA margin guidance and that is in the range of 20 to 24%, was there a one-off adjustments in Q1 because margins crossed 25% mark in the quarter gone by?
No, there are no one-off adjustments, but as you know, in our business, there is seasonality. So therefore, these numbers vary from quarter to quarter. And more importantly, our A&SP spends are dependent on what is needed to be done for the brands in that period. We do not go by quarter to quarter. So in the quarter that has gone by, you're right, we've delivered 25.1% EBITDA at a consolidated level. But the reason for that additional EBITDA is perhaps the phasing of our A&SP and the seasonality of our business. Otherwise, we stay committed to our 20 to 24% corridor on EBITDA margins. The input costs remain benign, and that has helped us. And as our volumes grow, we continue to find leverage in that space. So those two are more fundamental things which will continue to help us as we go forward.
Let's also understand the demand scenario. Is demand in urban areas better than rural, or is rural demand too picking up pace now?
So rural demand indeed is picking up. But for us as a company at Pidilite, rural has always delivered in the foreseeable past. If you see, I'm saying in the past 4 to 5 years, I think that trend has been almost very consistent for Pidilite. Our rural growths are always better than our urban growths. And in the quarter gone by, our rural growths have again been better than our urban growths. But you're right, the demand sentiment in rural is improving, and that further helps us.
Mr. Watts, any major capex plan in the coming years, and what will be those for?
So we have a very clear guidance on our capacity expansion as well. Roughly 3 to 5% of our revenue goes into building our capacity as we go forward. As I speak to you, we are building newer plants, consolidating a few plants, but that's an ongoing activity in order to ensure that we are able to deliver to growth. I think 2 or 3 pillars of our expansion plans are: one, we will continue to strengthen our distributive supply chain strategy for our brand Roff, which is growing very, very well, as you know. But we will at the same time continue to modernize, automate, and consolidate some of our plants in our more established brands like Fevicol and Construction Chemical.
All right, Mr. Watts, how is Pidilite scaling its EV and electronic adhesive segment? And are there any recent wins or partnerships?
So Pidilite continues to look at all new avenues. And you are absolutely right that electronics and EV mobility are segments that are very important for us. As I've said earlier, we are continuously making customer calls. We've reached out to all the big EMS players, to all the EV players. Our products are getting specified in some places. In the quarter gone by, we've also won one additional large EMS player. This is a gradual process. We will continue to build on this. This is an area which we are really focused on, and we'll build in this area.
All right, Mr. Watts, last question to you. What is your strategy on the rising competition in the paint sector? Recently, a big acquisition was announced in the sector. Now, what are the company's plans to gain market share amid rising competition here?
So, as far as Pidilite is concerned, true to our moat and true to our DNA, we are building this bottom up. As you are aware, we are there in rural India, which is the small town India, and rural. We are building this in a pilot phase in 4 to 5 states. We are continuing to see improved results month on month, quarter on quarter. At the same time, we need to keep sharpening our playbook, establish right to win, and build stronger business modules before we expand. So the good news is that we are continuously growing in these places sequentially, both quarter on quarter, but more importantly, even month on month. So that's really good news across the 5 states we are in. But we are committed to growing it at the bottom of India and building it from there. We are not playing the battle in urban India, which is currently getting played out.
All right, Mr. Watts, thank you so much for taking time out and talking